time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching IndianOpen. Let's go straight to the headlines. The Organization for Economic Cooperation and Development cut its global growth forecast to 1% from 1.8% earlier, warns that trade tensions and Brexit uncertainties may cause more downgrades. India considers moving the World Trade Organization against Trump's decision to withdraw import incentives for about 2,000 goods under the trade preference scheme. The Income Tax Department will increase its scrutiny on 87,000 assessees who made large deposits during demonetization, this after they failed to respond to Tax Department's queries. And the Central Bureau of Investigation has sought additional documents from ICICI Bank relating to loans disbursed to the Videocon group. Well, lots of corporate news flows, and quite unlike the last 2 days, the equity news flow may be a bit tempered, but that doesn't mean that the markets will not be active. In fact, the US markets have come off in the last 2 or 3 sessions, and that may just put that little bit of pressure on the world markets as well. In yesterday's session, S&P 500 cracked about 18 odd points, Dow Jones about 0.5%, Nasdaq cracked about 1% as well. I don't know if this is due to global growth concerns, fresh data point to slowdown in the US economy, or this consistent lack of clarity on the trade war. All of that starting to weigh in on the US markets, and that might well likely weigh in on the world markets too, because if you look at the Asian screen today, it's a mixed bag. Nikkei is down about 0.75%. Hang Seng and Shanghai are very flattish. The SGX Nifty indicates a start which could be flattish in trade today as well. So there could be a bit of a pause into what's been arguably a bit of a rally around the world in the last few days, and India in particular as well. I mean, March futures ended at about 11,087, which is a premium of about 34 odd points start of the series. And very interestingly, the call and the put data seems to be shifting on the downside. So the call strikes, the maximum call strikes, have shifted from 10,700 to 11,500 on the call side and 11,000 on the put side. So that's the big change that has happened. From a range of about 10,600 to 11,000, we are now looking at a range of 11,000 to 11,500. So the trading bent has certainly shifted on the upside. The question mark only is, will a pause-like situation in the morning today result in a pause or result in some bit of uptick in the latter half of trade? Because that's something that we've been used to the last couple of days now. The breadth has been positive, flows have picked up, and money seems to be coming into the Indian markets from both the DIs and the FIs. Speaking of FI flows, March has not been a bad month at all. 198 crores, 752, 870, 1131, the average, much higher than the average for the last 5 days of February as well. Shave off for one-offs, of course. So the FI flow continues to be good and solid, and that should only augur well. However, amidst all of this, and very difficult to predict what the markets could do intraday or the next few days, so I will not get into that game, to be honest. Very difficult to call, and I'm certainly not the one to make the call. Let me still try and tell you what are the stocks that could be interesting to monitor in the session today. Parthiv more for the news and not necessarily for what the impact on the stock could be, but S&P says, Global Rating says that the 25,000 crore rights issue is not enough to stabilize the credit rating in the company. So that's an important stock news flow to monitor, not necessarily stock impacting. Endurance Technologies, remember, it was amongst the top losers in trade yesterday because of the OFS. The point is, there's been a very strong response to the OFS. The non-retail OFS subscribed 4.61 times, and that shows the institutional appetite for this company. Yesterday, a lot of fundamental experts on different shows suggested that it's a well-performing company and therefore they expected good response, but this is an extremely strong response from the institution side to Endurance OFS. Post the OFS getting over, there might be some bit of reversal is what fundamental experts tell me. Let's wait and watch if that happens. A small regulatory hurdle for Biocon. US FDA has issued Form 483 with 6 observations for the Bengaluru facility. The management, of course, says it's confident of addressing these issues quite expeditiously. I was speaking to Darshan before I came in for the show. He believed that this is not that big an issue. Let's see if there is an impact on the stock or no. May not be a dramatic impact even if there is one. Normally people refrain from talking about HFCL, but they've been winning some interesting orders of late, and which is why I bring this up today. Another 117 crore optical fiber order from Tata's order to be executed over 24 odd months. Do watch out for this one. Morgan Stanley is cautious on IDFC First Bank. They have an underweight rating now. The price target has been cut to 30 from 35 odd rupees. That's substantially lower than the current market price for IDFC First Bank. They believe that it's expensive, and the valuation therefore leaves no margin for error, which could come about and could bring the stock lower. It's an interesting note as well, but because it's a Morgan Stanley price cut, you might see some impact on IDFC First Bank today. Let's wait and watch. And CLSA remains bullish on Z. Now, I don't know if they know something that others don't, but they believe that the management change is unlikely post the stake sale, and the stake sale is likely to be at a premium. And the stock is trading at a discount to the 10-year average valuation. I think, now again, the question mark to be asked is if CLSA knows something about a possible deal brewing, which the street doesn't know about. But on two counts, one, that because it trades at a discount, and because they believe that the strategic sale will be done at a premium, they are confident, and they have retained the buy call on Z Entertainment. So let's wait and watch what happens here. So multitude of stocks to monitor today, some on news, some on brokerage calls. Let's wait and watch which one reacts. Global growth, of course, is slowing down, as I said in my trade setup, which is probably why the S&P 500 too buckled down under stress yesterday. The Organization for Economic Cooperation and Development is the latest organization to cut growth forecast for 2019, citing hiccups in the US, China, and mainly Europe. And it says it may not be done with downward revisions just yet. Kathleen Hayes of Bloomberg News sums up the key takeaways from OECD's latest release.
I'm sure they didn't plan this, but the fact that the OECD comes out with its February 2019 forecast and makes an overall cut. I mean, even the U.S. was downgraded a little bit, but what it said about Europe, again, overall global growth will be 3.3% this year. They had been looking for 3.5% in November, but they made it clear it could get even worse if downside risks materialize. Europe's forecast, though, it was cut to 1% for this year from 1.8%. Germany's outlook, the largest economy by far in Europe, that forecast cut to 0.7 from 1.6%. Now, of course, the OECD is playing a little bit of catch up because there's been almost 4 months since their last forecast. What's been going on? Well, the weakness in Europe, in China continues. Trade slowing even more. And then, of course, Brexit is getting worse all the time. Let's listen to what Nick Marouzos, he's the global head of fixed income at Janus Henderson, had to say about all of this earlier today.
The OECD report, all it did was reinforce what we already knew. It's sort of taking us back to the last 6 months and what's happened in Europe. What the real signs that we should be looking at is that the red flag should be waving all over Europe. You have a situation where growth and inflation have decreased significantly, and it's going to force the ECB to really reassess whether or not this is going to affect them permanently.
Interesting that John Williams, president of the New York Fed, speaking in New York earlier today, also really stressed this weakness in Europe, what a concern, what a consideration it is. And of course, again, ECB is going to wrap up this two-day meeting several hours from now. And it'll be interesting to see how this concern is reflected in their own signals about what they're going to do next.
Well, let's see if the global growth concerns start weighing in. I think we've heard multiple people say that some are not too concerned about this from an India perspective because India will stand out. Some saying that with the global tide cooling off, all ships will start to move lower. So it depends. Let's wait and watch. For today's session, though, as we said, a tempered start anticipated. However, let's tell you what's lined up on First Word today. It may be a tempered start, but the Nifty 500 is gaining a lot of altitude. However, the breadth remains weak. Yatin Mota will join us with why the rally may be feeble. Coal India has missed its off-take target for 10 years in a row. Will this year be any different? Nikki Mirchandani will join us with an analysis. And Ajanta Pharma has a plan to counter the weakness in its tendering business in Africa. Darshan Mehta will tell us all about it. The last few days, as we said, have all been about the broader markets. The Nifty 500 managed to cross a crucial resistance level. The index closed above its 200-day moving average for the first time this year. But how momentous is the rally? Yatin Mota takes a closer look at how the constituents have performed thus far to find out. Yatin, good morning.
Good morning, Neeraj. Some interesting facts as far as Nifty 500 is concerned, and more importantly, we need to focus on the Nifty stocks and non-Nifty stocks, which constitute a part of the NSE or the Nifty 500. Of course, this chart is on your screen, and you can see that decisively we are now trading above that 200-day moving average. Earlier, we had an attempt in December 2018, wherein the index tried to cross the 200-day moving average, but couldn't sustain the gains which were made in December. Of course, we have the Nifty 500, which has crossed the 200 EMA first time in 2019. And the top contributors, we are talking about the non-Nifty contributors towards the Nifty 500. They include the likes of Wipro, Divi's, of course, it has been doing well on the back of the API growth story, which is there. PFC, REC, after the government approved, the takeover of REC by PFC. Both of these stocks are trading at 52-week high, mind you. Colgate, Federal Bank, ICICI, Lombard in the insurance space. Bata, we have spoken about a lot of times on in IndianOpen as to how really does the entire valuation matrix and the growth story unfolds. RBL Bank is another stock in the financial space which has done extremely well and has been the top contributor as far as the Nifty 500 is concerned. But if you look at the few stocks which have bounced back from the 52-week lows, we have seen nearly 10 stocks, have doubled from the 52-week lows. It includes the like of Adani Power, Suzlon Energy, Balrampur Chini. Of course, sugar has been doing extremely well. So after the turnaround in overall, sugar operations and the ethanol story, Balrampur Chini has seen a 100% plus appreciation from the 52-week lows. Merck, Dish TV, Vakrangi, Vinati Organics has been doing well. DCM Shriram, 8K Mile Software, and Praj, of course, on the back of the ethanol story again has been one of the stocks which has doubled from the 52-week lows. So these are the 10 stocks which are done exceedingly well as far as the Nifty 500 is concerned. But mind you, this is not a rally which is clearly very secular in nature. We have only 13 companies at this point in time which are at a 52-week high. Of course, we have taken companies with market cap in excess of 2,500 crores. Divi, Bata, UPL, Awas, Balrampur Chini, REC, PFC. These are the stocks which have done extremely well. However, there are a handful of them. Out of the 500 stocks, only 10 stocks at this point in time are at a 52-week high when you talk about market capitalization above 2,500 crores. Overall strength of the market remains weak because nearly 175 stocks only in the Nifty 500 are above the 200-day moving average, which are heavyweights, of course, which are Nifty constituents. Nearly two-thirds of the market still is below the 200-day moving average. So nearly 65% plus stocks are below that 200-day moving averages. But that is the reason why we say that this rally is probably not secular. Only a handful of stocks are performing as far as the Nifty 500 is concerned.
But interestingly, Yatin, there are a couple of patterns to this too, right? A lot of, it usually happens in all rallies, but this time around, it's not necessarily been just the beaten down stocks that have moved up. In this rally post the lows as well, a lot of well-performing stocks have continued to do well. Divi's, for example. Yeah.
Of course, it's the like of Divi's, it's the like of Bata, RBL, ICICI, Lombard. Also, there was a quarterly blip because of the shares fell, but have corrected or rebounded significantly from those lows. There are a handful of stocks, but Neeraj, mind you, like the previous few scenarios of Nifty 500, it has not been that secular or that inclusive, wherein all of the stocks move together. That clearly is from the fact that nearly 65% of the stocks still are below the 200-day moving average.
Well, let's wait and watch if they tend to recover or no. But remember, it's just the start. If this is indeed the start, then the rest of the music will follow soon enough as well. Yatin, thanks for putting that into perspective. A lot of talk around what's happening in the mid caps and the small caps. Well, some information out here, some analysis out here. Information is available across. Some analysis of how the rally has been. Maybe not too broad-based. Let's move on. A weak tendering business in Africa hurt Ajanta Pharma in the third quarter, but the drug maker has a plan to counter the impact. Darshan, who spoke to the management and a management which usually doesn't come on media. In fact, I've never spoken to them in my career, but Darshan managed to speak to the management and joins us right now with what the company had to say and the strategy. Darshan, good morning.
Good morning. So basically, I'll first tell you what the numbers were. So because they were on a lower base and very good growth that came in across India. The Africa business, they were doing well. So they were for the last 10 years, they were growing at an average CAGR of over 25%. Now this year somehow seems to be very, very weak for them. If you're looking at the India business somehow has managed to hold on for them, because if you look at the third quarter numbers, the 9th month numbers, the India revenues are up anywhere between 9 to 10%. But exports, which actually includes the Africa generic business, Africa tender business, US and Asia, that was down 27% in this quarter itself, which caused the revenues to be 17% down overall in the third quarter. And even if you say that, okay, third quarter was an anomaly, in the first 9 months also, the business is down almost 10%. Even though US and Asia managed to stay stable, the Africa business continues to bleed for them. So that's the big problem for them. Now, if you take a look at what's happened for Ajanta Pharma, you take the financials into consideration. From FY14, you can clearly see that the revenues have actually grown at a decent CAGR. It was only in the first 9 months of FY19 that you will see that the big dip has come in. So it's this year that the impact has come in, both on the profit side. Margins were anywhere between 30 to 35%. They have now come close to 29% for the first 9 months, and the third quarter was even worse. They came in at 22%. So there is clear indication of weakness that is there. India is a large portion of their business, 35% of their business. The Africa business together puts in 25%, Asia is 25%, and US is 15%. So overall, they are spread across, but predominantly it's Asia, India, as well as Africa that have a lot of business, and there is weakness as far as the Africa business is concerned.
So, if we look at it region-wise and business-wise, how is the health of each of these businesses?
Yeah, so we wrote to them indicating, and what strategy that are you looking to follow, because post the third quarter numbers, which were really bad, we wanted to find out, where they are growing, because Africa is not doing well for them. So what is the other avenue? Basically on India, what they're saying is the fact that one of the big problem was the Melacare, which is a skin cream, which actually saw a big decline that came in. And the big concern was what is happening. What they're saying is that they are seeing stabilization now. The drop has stopped now. Probably growth will start coming in for Melacare. So that's a positive for them. It's a big derma product for them. They expect to match growth in terms of all the product categories that are there. They are present in 4 categories in India: cardio, ophthal, pain management, and derma. Out of which derma is not doing well. The others, they are managing to beat the industry. They say that they are growing above the industry average in the 3 segment, apart from derma. And derma probably now with Melacare stabilizing will start actually following up. So if we have a table showing what happened in Ajanta Pharma in terms of their growth in the third quarter compared to the industry average. So if you see for derma, they are underperforming the market. Apart from it, the other, in terms of the peer group, they have managed to do well. As far as the Africa tender business is concerned, they are saying that the allocation for Africa business will remain flat. Probably for FY20, they see a 20% decline in 10% decline in institutional business, probably, which shows that there could be more pain for the Africa business, and they expect to retain market share post IPCA. So they gained a lot of market share because IPCA was out of the market. So they gained share. Now they're saying that IPCA is back. That share has again gone back to IPCA. So that's something on the Africa business. US is growing. It has a small business there, but they look at being a generic player there. They have started seeing a little bit of traction that came in on the 9 months. Yes, they showed growth, but the third quarter was bad for them. So they're saying that they plan to launch 10 to 12 ANDAs every year, out of which they will launch anywhere between 6 to 7 products, in which these will be smaller products, in which they will slowly and steadily start growing. And what do you look for things ahead in terms of the overall business? They expect to maintain growth momentum that will come in. Institutional business will get stabilized for them, and most important thing is they're saying that weakness will persist in the Africa business, but it's the other businesses now, the India business, the US business, that will actually come ahead to offset this weakness in the Africa market.
Okay. Darshan, thanks so much for that. While you are with us, just one quick perspective. A couple of pharma companies in news because of some observations that have been passed on them. Quick thoughts out here. Biocon in particular.
So 6 observation, yes, it's the thing, but remember, it's not a GMP inspection, which means the entire plant was inspected because of some issues. It was a product specific. So Biocon filed an NDA. saying that we want to launch this drug. So the US FDA for that particular drug came and this thing. No doubt it's not positive. 6 observations for them. They are saying that they will be able to, get done with this. I don't know what the observations are because the FDA will release these observations after 2-3 weeks. So till that time, we have to rely on what the management says. They are saying they will be able to get this done. So we need. It's sort of sentimentally negative for Biocon, not majorly negative because it's only for a particular product that this inspection was done, and it was a pre-planned inspection that happened.
Got it. Okay, Dashan, thanks so much for putting all of that perspective and great research on Ajanta Pharma. As I said, a company that you don't hear about too often on media because they don't talk to media. They managed to speak off air, and that was the analysis. The last piece on First Word today is on Coal India. It's always over-promised and under-delivered on its total offtake number for the last 10 years, and this year it wasn't looking any different. But February has given a glimmer of hope. Now there are a number of factors that have contributed to the pickup, be it higher production at 2 of its coal fields or an overall pickup in demand from the power sector. But will it prove enough for the company to break its 10-year jinx? Nikki Michandani has the math. Nikki, good morning.
Good morning, Neeraj. Well, Coal India for the month of Feb has delivered decent set of number. Rather, the growth has recovered in the month of Feb YOY basis. YTD basis, we are looking at a 4.5% uptick, 3% uptick for the month of Feb year on year. This notably comes after the decline that we've seen for the month of December and January, mainly on account of the recovery that we've seen in Mahanadi coalfields and southeastern coalfields. And the total target with this is around 610 million ton. Now, what the company needs in order to meet its target until now on YTD basis, it's already delivered a number of 548.5 MT. To reach a target of 610 million ton, it will have to deliver another 661.5. But going by the estimates or the little math that we have done to understand whether or not the company would be able to achieve this, our number for the month of March comes to a level of around 56.5 million ton, which is a little short of around 5 million ton for achieving the 610 million of target that has been set by the as per the memorandum of understanding with the coal ministry. How did we get this 56.5 number? Well, if you just add a 10% growth on the Feb numbers, you would be able to derive the 56.5 number. And typically, Coal India in the last 5 years for the month of March has on an average clocked a 10% growth out there. Going by the historical trends, we've added up to that number. And even if we add up to that number, we will get an overall number for the complete year to a tune of around 605 million ton, which is 5 MT short of around 610 million ton, which means that the company would be able to achieve around 99.8% of the target or 99.2% of its target, which is the narrowest miss now that we have at least since in the last 10 years. So that's a big feat for the company. But then, Amit Dixit Edelweiss suggested that we got to bear in mind the fact that the target this time around is 610 as compared to 600 of the previous year. And also the growth rates for FY19 year-on-year basis is going to be 4.5 going with the estimate as compared to 7% that the company clocked in previous year. So even after meeting the targets, the company still will register slower growth year-on-year basis. But if I'm just supposed to give you a little valuation on the stock price figure of Coal India, in the last 6 to 7 odd session, the company has done, it's rallied and a 10% uptake coming in there. And also, besides that, if you look at the valuation, currently the stock is trading at around 10% discount to its 5-year long-term average. So that's quite some valuation that we're talking about.
Okay. Nikki, thanks so much. Just one follow-up to this. Maybe you briefly mentioned it, but if indeed, do the prospects of Coal India as a stock hinge on whether they are able to deliver and break this 10-year jinx? What is the street telling you? Would they turn bullish on Coal India if indeed the offtake numbers for the month of March and thereby for the year, they manage to meet the targets?
Well, Coal India has never been seen upon that way. If you see, it's also like a dividend-paying, cash-rich company that we're talking about. But then if it manages to meet the target, that definitely has a volume to speak in itself. In fact, I was talking to one of the officials of Coal India, and he said this time around they would be able to meet the 610, but then that still will be lower as compared to the internal targets of 645 MT.
Right.
Given
but
that,
which is the management
which
comment?
is the rate.
What about the analyst community? Do they kind of
So much of it depends actually upon the dividend yield that the company has been given.
Not so much of importance to this output number.
Not really. I mean, internal inefficiency still continue to be a factor for Coal India because the rake unavailability is still an issue for Coal India right now.
Okay, Nikki, thanks for putting that into perspective. So that's on Coal India. Well, they may do some good things, but that may not be enough. The bigger elephant in the room would continue to remain the dividend deal. I must say, though, companies which are, I mean, Coal India has gone about 10% in 7 days. Look at what's happened to Nalco, for example, after it gave out the dividend numbers, which, when it gave out the numbers, led to the stock trading at about 9% dividend yield, and it was quickly lapped up. Since then, I mean, the 1 month performance, it's flat, but if you see the rally, it's happened post it giving out those dividend numbers, and the up move since then has been quite fantastic for Nalco. Let's see if a higher dividend, if it comes about from Coal India's side, does the trick for that company as well or no. That's all that we have on First Word today, though. Quick programming note, we discuss all about markets and the broader market rally with Jyotivardhan Jaipuria, Valentis Advisors Johnson at 9 a.m. Talk about the growth opportunities for Quess Corp with Chairman Ajit, ISAC, and then speak to the VP Nandakumar of Manappuram Finance on business outlook, fundraising plans, and more. But after this break, a full tilt towards the day's trade.
संगी सुनामिका नोनी बाबू ददासिया चारों कोती सुन बिहान हरिहर खेत भरे कलिहान गद का कैसे करो बखान छत्तीसगढ़ मां बसे परान छत्तीसगढ़ मां बसे परान।
नई सरकार है तो नई उम्मीदें तो होंगी ही। प्रदेश के नए मुखिया भूपेश बघेल ने जब से अपना वादा निभाया है, प्रदेश के किसान चैन की नींद सो रहे हैं। घोषणा पत्र में किसानों से किया गया वादा, मंत्रिमंडल के शपथ लेने के मात्र 2 घंटे में 2 बड़े वादे पूरे किए संवेदनशील सरकार ने। एक ओर जहां प्रदेश के 16,65,000 किसानों की 6,100 करोड़ रुपए की कर्जा माफी की, वहीं दूसरी ओर देश में सबसे अधिक 2,500 रुपए क्विंटल पर धान खरीदी की मंजूरी देकर उनके मन की मुरादें पूरी कर दी।
ऋण माफी के साथ साथ 1,700 जो समर्थन मूल्य है उससे बढ़ाकर 2,500 रुपया में दोनों फैसले हम लोग लिए,
जिससे प्रदेश के किसानों के चेहरे पर मुस्कान आ गई है और उनके आर्थिक और सामाजिक प्रगति में बढ़ोतरी हो गई है।
मोर खाता के पैसा है कटगिरी से सबो है वापस आ गए।
जुग जुग जिए हमार दुलरवा बेटा।
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people. Where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj. Follow-through came in yesterday. That was an encouraging aspect, but the important point being the kind of moves that the mid-caps and the small caps have shown. The NSE 500 breaking its 200-day moving average. So the small cap index not above 200, but definitely above 50 and 100-day moving averages. So on the charts, looking strong, but now slightly looking overbought too, because of the pace of which these stocks have been bought into.
Yeah, and the breadth on the broader markets hasn't been the strongest.
Yeah.
So a lot of stocks still sub the 200-day moving average. So you can look at it both ways. Maybe there's enough room to catch up as well. And if those stocks move up, then it could support the index. So double-edged sword. Let's see which way it goes.
All right, so those are some cues that we'll watch out for, and watch out for the index itself and the move thereof. But one stock in focus is Nalco. Vedanta has filed a case against Nalco at the Odisha High Court for being disallowed to participate in tenders for sale of surplus alumina. If the allegations are true, then why wasn't Vedanta allowed to participate? Nalco's chairman and MD, Mr. T.K. Chand, is joining us on the phone line. Mr. Chand, thanks so very much for joining us. Just throw some more light on this particular case that Vedanta has filed against you.
I have heard that Vedanta has filed a case because I am out of country now in Canada, attending PDAC 2019. So what I came to know that they filed a case and on grounds that they should be allowed to participate. So now the court is hearing the case. So it is now under sub judice.
Can you tell me exactly how much surplus is it that you are looking to export, and how much do you generally export, and what is the shortfall that's there in the domestic market because of which sourcing has become so difficult for manufacturers?
We generally export around 1 to 1.1 million ton of alumina, and in the domestic market, sometimes Nalco also exports around 2 to 3 lakh ton of alumina, and there is also equally same amount of the alumina also gets imported. That is there always in all materials. In aluminum also, material is exported and material is imported. In iron ore also it is exported and imported. So in all commodity, there will be always export and import.
Just one more question, Mr. Chand, with regards to the supply right now, and what happens now that the case is in the court? Because it looks like they're talking about restricting you from supplying to other people as well. So is there a possibility that the supply will get constrained at your end?
Right now the market is completely global market, so it all depends on the price of the commodity, which determines whether a person will take it from domestic source or a person or a company will take it from the source outside through import. So these things are right now. It is globally the prices are determined, and globally also supplies are also determined. So it all depends on the individual player in the market, how
Mr. Chand,
they react or respond to
of course. Mr. Chand, a couple of things. I appreciate the matter is sub judice. Just two questions from my end. One, I think the report says that the ground for rejection of Vedanta's bid to participate in this tender or any of the other tenders is the eligibility criteria. Are these set up by Nalco Nalco as a company itself, or is this based on some directive from the government side? And are they liable to change over a period, or do they stay static?
No, Nalco's eligibility and other conditions are always there in website, which is not for the last 20-25 years that such criteria have been there. So it all depends on individual companies to formulate their commercial policy and commercial strategy, and depending on that, things are determined. And I understand that this is there for the last 20-25 years, and it is available on always in website.
Okay. The other question, Mr. Chand, would be, has it happened in the past? I mean, I think what Vedanta is citing, or what I think what they are saying in the writ petition, is that because the domestic entities do not have enough supply of alumina, why is it that Indian companies are going out and exporting this to other countries? It's a global economy, free and fair economy, I agree. My question is, has it happened in the past that cases of this nature would be entertained in the first place?
I do not know any such case, what has happened in the past, etc. Because as you know that if you look at the market, all kinds of commodities are either exported as well as imported also.
Yeah.
Because iron ore, India is importing, India is also exporting. Whatever commodity for that matter you name it, India is exporting, India is also importing. So that sort of a thing is going on. If I generally look at that thing, but I don't know whether the past, whether such type of things, specific things, etc., those things I can't comment on those.
Right. One last question, Mr. Chand. Is there a big spread difference between, the export prices and the prices that you're getting domestically, which could be one of the reasons why you would rather prefer exporting the surplus than sell it domestically?
Sometimes export prices are better, and sometimes domestic market prices are also good. But apart from that thing, all companies, they generally keep their domestic outlet always ready. Should a situation come in, the domestic or export outlet take the market. Because in a marketing plan, all segments are kept alive, so that in case of any requirement, each segment is in a position to immediately get activated. So from that angle, always all the segments are need to be there.
Sure, but it still doesn't answer my question about the spread of the prices, sir. Is that a big difference between your export price and your domestic sale price?
Big difference depending on market situation. I do know that market alumina and aluminum markets are quite volatile. Sometimes it is very good in the export market, sometimes in domestic market is there. But generally, pricings are made on import parity basis. So that sort of a thing is getting done.
All right, Mr. Chand, we'll leave it at that. Thanks so very much for joining us this morning. Mr. T.K. Chand there of Nalco talking about the case that Vedanta has filed against Nalco at the Odisha High Court.
Parthiv tracks this space very, very closely. Frankly, I am not aware of such a thing happening in the past. Though the said report says that in 2016, Piyush Goyal had back then wondered that how is it that companies like Nalco are exporting so much of alumina when domestic companies are starved. But Parthiv Shah may be knowing a thing or two about this. He tracks, as I said, this space very closely. He joins us for this and more, of course. Parthiv, good having you. Thanks much for joining in. Not necessarily about what an impact of such a case could be, because it's all sub judice. We never know which way the court will move. But the kind of rally that some of these PSUs and the metal names like Nalco, etc. have seen, what do you do with these stocks now? About a 15, 18, 20% move in the last few days on the back of the dividend announcement and the rally at the broader end of the spectrum. What does one do now?
Neeraj, on a very different note, I think I would assure you, if Nalco had been a private sector company, this would not have been the price. The price would have been at least more than double. Here is this public sector enterprise which enjoys a lot of benefit in terms of fully backward integration, in terms of owning coal mines, owning bauxite mines, producing one of the good quality alumina, not having any disruption in terms of the energy cost or all the raw materials. And yet I think we see this stock quoting at like below 5 times EV EBITDA multiple. And I think we have other peers like say Hindalco, Vedanta, who I think always, if you check out their con calls, I think they have been always complaining about not having a proper source of the raw materials. And despite the fact that India having a lot of resources within, I think in terms of the commercial mining licenses, all of that is taking a lot of delay. And I think a lot of capex is getting starved in this sector within the country, as a result of which, I'm afraid that if this is a scenario, the way like the per capita consumption of aluminum is growing, I think we might be importing it. So I think probably that's the key reason why I see all this case happening, where Vedanta has now realized that, it's best to kind of at least go to the courts and try and make sure that, it also has a level playing field. Again, can get really political and nasty. But in terms of the overall scenario, I think the only reason why I see Nalco rallied recently was because it being a cash cow for the government, where I think during the March season, we always tend to see these companies dole out a huge dividend, and the dividend yield, I think, probably attracted a lot of investors. And many people, I think, have this theory of investing based only on the one-time dividend sort, which we are not a big fan of. But nonetheless, I think this entire aluminum sector, I think Hindalco seems to be one of the best plays. Their Utkal refinery is catching up quite well. And I think slowly and gradually they will have that backward integration with alumina refining into aluminium. And also the copper division with all the value-added products that they are targeting, I think should do well. But again, I think for investors, this is a commodity space. Despite it being Hindalco, one will have to be a positional investor at the best and always keep a stop loss in such commodity investment plays.
All right. Parthiv, just stay on with us. Lots more to talk about and get your thoughts on. But in the meantime, we've got some stocks in news. We've got some brokerage calls coming in this morning. More or less, whether or not they'll see a reaction on the stock price is something we'll have to wait and watch. But Mishika, Sameet, both of them are here with us. We started with you, Mishika, on stocks and news.
Yeah. There are several stocks that we need to look at today, starting with LT Foods. LT Foods is going to invest 20 crore rupees in its subsidiary Daawat Foods via preference shares. This investment will strengthen the balance sheet and improve current ratio of Daawat Foods Limited. HFCL bags orders worth rupees 117 crores to supply optical fiber cables to Tata project under Bharat Net Phase 2 project. The order to be executed over a period of 24 months. Biocon said that it has received 6 observations for its Bangalore facility under Form 483 from US FDA. The pre-approval inspection by US FDA was triggered by a new drug application submitted by the company. The inspection at the Bangalore facility took place between 25th Feb and 5th March, and the company is confident of addressing these observations expeditiously. Asian Granito raises rupees 90 crores by way of issue of convertible warrants to promoter and non-promoter group entities. Odisha Cement clarifies on various media reports that it never authorized Allied Financial Services to transfer, use or pledge the mutual fund units. It also said that the amount received by Jayesh Doshi in his account is legal and valid. Jayesh Doshi is currently the director of Odisha Cement and Contribe Technologies. Now let's have a look at DHFL. CARE Ratings downgrades ratings of various debt instruments of the company, citing further moderation in financial flexibility due to limited progress of earlier envisaged strategic measures and inflows from securitization deals to build up additional liquidity. Lastly, among the key bulk deals, we have DSP Mutual Fund that sold 21.7 lakh shares, that is close to 3% stake in Everready Industries at rupees 200 each. Buyers include India Opportunities Growth Fund, OHM Enterprises and OHM Juniper Fund.
Right, Mishika, thanks a lot for that. Sameet, some brokerage calls this morning?
Well, a couple of them. The first one is on oil marketing companies, where UBS says that the state-owned oil marketing companies are in a sweet spot with near all-time high marketing margins. Now, this high marketing margins would help oil marketing companies offset the lower refining margins that is currently being seen in the refining market. Now, currently, oil marketing companies are trading at a 20 to 40% discount according to the broker, and this should change on the back of this consistent high marketing margin earned by the oil retailers. Now, it has maintained its buy rating for all the 3 oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, and has hiked the target price for all the 3 OMCs. For IOCL, it has been hiked to around 185 rupees from 170. For BPCL, it has been hiked to 415 from 380, and for HPCL, it has been hiked to 315 from 290. Now, second note we have is on from Antique on the non-banking financial companies. Now, owing to the proposed regulatory changes of higher capital requirement and lower leverage capital, the brokerage believes that the return on equities of the non non-banking financial companies would come under pressure, but that would still result into a healthier balance sheet, better ALMs, and the much needed moderation in the competitive intensity. Now, the brokerage has initiated coverage on Canfin Homes with a buy rating and a target price of 373 rupees, as it believes that Canfin Homes is one of the few housing finance companies that can still deliver a return on equity of in excess of 18% despite this proposed regulatory changes. For LIC Housing Finance, it has downgraded the rating to sell from hold but has maintained the target price at 440. For PNB Housing Finance, it has maintained its hold rating but has cut down the target price to 966 from 1340. Now, for LIC and PNB, it believes that both the companies may have to either raise capital in 2019 or slow down its growth rate over the next 2 years to reach the lower leverage ratio that has been proposed. And for Repco Home Finance, it has maintained its hold rating with the target price and have hiked the target price to 487 from 375, as it believes that the company will remain unaffected with these changes. Lastly, for HDFC, it has maintained its hold rating with the target price of around 2,159 rupees.
All right, guys, thanks a lot for that, Mishika and Sameet. So those are some stocks you need to watch out for. Parthiv, just come back to you on the OMC basket, and that's got a lot of interest off late, whether it be BPCL, HPCL, IOC. Crude prices stabilizing around that 65 to the dollar mark for Brent crude. What's the likelihood of these stocks doing better in the coming few months?
See, Devin, I think these OMCs do have multiple moving parts. We know for the fact that they have this marketing margin business, they have this refining business, and also I think at all juncture, I think we know for the fact that these are very, very sensitive to any change in the government policy. And that's a key reason why all the three companies, despite being fantastic assets the way they are, I think they don't quote at, valuations even matching anywhere close to what global peers kind of quote at. And these will scale. There is no two ways about it. I think they are in a nearistic monopoly when it comes to retail marketing of petrol, diesel. And I think they have ambitious plans in terms of kind of adhering to the needs of Bharat Stage 6, and I think refining capacity is being upgraded. But I think these are very sensitive to, I think, any sort of political developments. My sense is that, these valuations currently, I think, are discounting a lot of negative. And I think it's better to pick one of the better run stocks out of all the three, which would be Indian Oil Corporation. I think this is a company which, in terms of its refining assets, has these complex refineries, especially the Paradip refinery, which can, I think, really kind of have a mix of Venezuelan crude and I think crude from Iran. And I think they have this complex refinery which can help them to get better GRMs. So I think if out of the three, if I have to pick one and leave it as an investment for the next 2 years from the current valuation levels, I think Indian Oil Corporation will be the one where I'll be looking at.
Oh, interesting moves there in all the oil marketing companies the last few days. The question is, can that continue? Parthiv, do you track Endurance Technologies? A very strong response to its OFS from the Insti side. The retail portion opens today. But post all of this hullabaloo getting over, is it a stock worth looking at for somebody who doesn't have it in the portfolio?
See, Neeraj, not that the valuations are very compelling, but I think one theory about Endurance Technology, and we know because of the close proximity that they have with the Bajaj family, in fact, their relatives, this company kind of started and pioneered its work engineering space with a lot of business to the Bajaj Auto Group. And I think even till date, Bajaj Auto forms a decent part of their forging business. And I think Endurance Technology has done extremely well in terms of upgrading its technological capability. No two ways about it. I think I would not take any credit from the management. And more importantly, I think of late, the traction that we are seeing in terms of the sales number from Bajaj Auto, wherein they wanting to be very aggressive in the domestic market, and yet I think they are kind of trying to maintain their niche in the export segment, coming out with new products. And these new products, I think, is very important for players like Endurance, because that's where the value-added components come into picture. Things like the new Dominar launch, which is a higher kind of CC bike that they're going to launch in the pipeline, does help players like Endurance Technologies. And I think certainly I believe that though the current trail valuations are a little on the expensive side, if on any dips further of say around 10% sort, I think it would become a decent investment bet over the longer horizon.
Okay. Let's wait and watch if that happens. Parthiv, stay on. Time to get in our technical experts on board. Aditya Agarwala, he's technical research analyst at Securities, joins us with his thoughts. In a bit, we'll get in Sameet, Chavan. And of course, coming up will be Bloomberg Edge as well. But Aditya, thanks so much for joining in.
Pleasure.
What's the Nifty call today?
So markets approaching their previous resistance zone of 11,070 to about 11,100. Market has made multiple attempts to cross that, but it fails to do so. But overall, the momentum is still there. The trajectory is still bullish. The trend is still bullish. If it manages to sustain above 11,070, I will take a fresh long. 11,070 happens to be a minor resistance zone. It is the upper end of the channel and also a Fibonacci retracement level. So 11,070 is one level which I'll closely watch out for. If Nifty is able to take that out, I'll take a fresh long for targets of 11,120 and can put a stop somewhere around 11,050 or 40.
Okay. Is there a call on the Nifty Bank?
So Bank Nifty is one which is outperforming at the moment. Yesterday it was led by the PSU banks. They did chip in. So Bank Nifty definitely looks stronger on the charts. 27,760 is the first resistance zone. If that is taken out, I would take a fresh long in the Bank Nifty for targets of 27,850 on the upside.
And today is the Bank Nifty weekly options expiry as well. So it's going to be important to watch out for what the last 1 hour of trade shapes up to be. Let's talk about individual stocks then and what you're recommending.
So Titan is a buy call from my side. It formed a flag pattern recently and in trade yesterday it's broken out from that flag pattern on very good volumes. So this is one stock which continues to make higher highs, higher lows. So any temporary pullback that the stock witnesses gives you an opportunity to buy again into the stock. So a buy call here for targets of 1,090 will put a stop at 1,030. Second buy call is again a banking stock. It's a Bandhan Bank. All the smaller private sector banks are doing well for itself. Bandhan Bank, RBL Bank, DCB Bank, they've done phenomenally well in last 1 week. So this is one which I've picked up. It is also breaking out from a consolidation range. Targets out here will be 530. One can put a stop at 485.
What about Yes Bank, since we're talking about private banks?
I can't comment on Yes Bank.
Okay. Yeah. All right. So liking the private sector banks and Bandhan Bank being one of those stocks. The mid-cap and the small-cap space, Aditya, have seen big movers over the last few trading sessions. Have you noticed any interesting trading option?
So there are pockets which are actually outperforming. So there are infra names which are going up. Cement has really done well for itself. There are raw material companies which are doing well. But I believe the most of the move, it's already played out in last 1 week, especially on Tuesday. Most of the stocks were up about 15 to 20%. One can still take a bet on Ashoka Buildcon. I think there's some more upside left in the stock. From current levels of 137, stock can test levels of 162. Apart from that, I'll just wait for the markets to a little bit cool off and then probably take a fresh bet.
Okay. So, well, that's the technical perspective from Aditya Agarwala at least. But speaking of charts, it's time for our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. We're tracking IGL on the charts and a bearish signal coming on the back of a bearish engulfing pattern that we are seeing form on the charts. Before we start, let's first try and understand what it is and how do you interpret it. Basically, the bearish engulfing pattern is the formation of a large red candle right after a green candle, wherein the body of the second candle completely engulfs the one ahead of it. The larger is the size of the second candle, the further are the odds or the greater is the evidence of a top. No further confirmation needed there. Coming back to the charts of IGL, as you could see yesterday, we saw the stock come under pressure. It managed to fall close to 3% or 2.8% to be precise, and with that, you're seeing that red candle completely engulf the one ahead of it. Now, a key thing to note over here is at the mark of 300 is where it has, tested resistance quite a few times over the last 1 year. One prime example being earlier in the month of January, where again it touched these levels and then it fell lower. Another example being in the month of August or slightly before that, again at the mark of 300 is where it has faced some resistance and it has come off. Also, what we are looking at is the RSI on the daily charts. That too has come off from the higher levels. It was at the mark of 64 with yesterday's day of trade. It has come down, as you could see. So with the confluence of all these parameters, it looks like IGL could see some further weakness in today's day of trade.
Okay. And how well has this worked in the past, Yash?
So Devina, the bearish engulfing pattern has been formed, every time has been formed over the last 1 year. On an average, it has managed to give returns of close to 3.5% over the next 10 trading sessions.
Okay, thanks a lot for that, Yash. Well, for a deeper insight on Indian equities, visit BloombergQuint.com, where we identify technical triggers that have emerged in a specific stock every single day. On today's Bloomberg Edge, we feature Mindtree and what its relative rotation graph and put-call ratio are indicating. That's a BQ Blue exclusive.
Well, let's wait and watch. Mindtree remains a stock that will have some news flow surrounding it for the next few days, and likely news flow surrounding it for the next few days, and might well have a bearing on the stock too. Parthiv, what would you watch out for when it comes to this one? Because a lot of talk about a valuation at which the promoter stake sale might happen and what the outlook post that would be. What would your thoughts be on Mindtree?
See, Neeraj, I would not rule out this important development because in many cases, not only IT sector, but in many sectors, we have seen what major influence the valuation re-rating or de-rating it has whenever there has been a significant change in terms of the management guard. So here, I think this is this company Mindtree where we are talking about a lot of rumor mongering that, you know, big players like L&T Infotech and some other IT groups or some other private equity players who have great experience in the IT field could have. A case in point in terms of an example I would like to cite is a company like Mphasis. I remember, I think this was a kind of a non-mover and I think no significant growth. But ever since I think Blackstone took over the charge, I think we are talking about Blackstone using its ability and all the other customers to have Mphasis deliver them the right digital solution products. So similar bearing could be there on Mindtree, and Mindtree always has this overhang about the promoter stake, especially Mr. VG's stake and also the Cafe Coffee Day Enterprises stake. I think if at all this stake were to go into very suitable hands, then I think probably there could be a good case of re-rating for this stock. And if at all in future we were to hear news like, you know, right synergies between a company like Mindtree and L&T Infotech in terms of a merger, I think in IT, if the merger synergies are right and if there is scale, I think then it can massively re-rate the business model. So I think what our call is on Mindtree right now is to sit on the sidelines, not get carried away with this development and buy on in anticipation. Let the event get over. I'm sure one will get opportunity to enter this stock at the right levels.
All right, that's on Mindtree. What's the outlook on the allied NBFC space? You've got mainly the flavor of brokerages like Edelweiss, IIFL Holdings, Valley Gas, smaller name but very active over the last few days.
See, even I think no two ways about it. Many of these NBFCs like Edelweiss, IIFL, AB Capital for that matter, I think they have kind of battered down to shape. And we know the fact that from their very lows, at one juncture they were quoting at about 3 price to book multiple, and now here they are quoting at around 1.2, 1.5 times price to book multiple. And we are seeing some smart money entering these names for a longer horizon. But still, I think even management of Edelweiss, Mr. Rashesh Shah, did allude to the fact that even currently the AAA rated, I think, bond paper is quoting at 100, 110 basis points higher. So their cost of funds being high, that problem has not gone. They are sitting on one of the highest liquidities historically. So again, the key concern or the question is whether these guys will be able to replicate that 20-25% balance sheet growth over the next 2 years is a slight concern according to me. But I think who would benefit from this problem? I think it would be the well-run private sector banks. So my sense is if anyone wants to put new money into the financial services sector, why not go with a lot of mid-cap private sector banks which are doing extremely well? A case in point being, we've been always recommending RBL Bank on your channel. And you see how well the stock has massively re-rated. No doubt at this juncture it's slightly on the expensive side, but why not look into players like Federal Bank, which haven't done much, but yet in terms of valuations they're quite good. They were decent loan book, and they could capitalize in terms of the worries that the NBFCs have. So I think our theme is more on banking on the mid-cap private sector banks as compared to trying to go for the NBFCs.
Well, do watch out for some of the others too. Look at Awas Financiers, Divi's Lab, Bata. all of these stocks are trading close to 52-week highs or life highs, as the case may be. Aavas is at life highs for sure. Divi's Lab, with the move yesterday, nudges its life highs again. Bata India continues to rise and shine. 1 month about 12.5%. Very strong show. So do watch out for these names. Parthiv, it's a double-edged sword, but a lot of times it pays to buy a company when it's trading at life highs because something is going right for it. Out of these three, do you track any?
I'm sorry, Neeraj, could you repeat the name? One is Aavas
Financiers, Divi's Labs, or Bata?
Okay. Bata is a very, very interesting play, Neeraj. No doubt this stock has massively re-rated, but we know for the fact that in India, one theme that is evergreen is consumption. And no doubt, I think in between, Bata had its set of problems in terms of its inventory management and the software upgradation. That was a point in time when the stock was available at hovering between levels of 500, 600. And ever since they've got their act together, they've remodernized their stores, launched new products, trying to focus on a more value-added segment. I think here this is a stock which is massively re-rated at 1300 levels. My sense is it's still an extremely good play, and in the footwear segment we know for the fact that if one wants to bet on this segment, the first name that comes to reckoning is Bata, after which it's Relaxo Footwear, post which I think there are not many credible names, and this is a opportunity size which over the next 5-7 years could be humongous. And whenever we talk about data points like per capita income crossing $2,000, everything, these are the proxy plays. So I think out of all the three names, Bata seems to be more scalable and sustainable in terms of value creation for shareholders over the longer horizon.
All right, and Bata trades near its 52-week high. The last 12 months shot up 90%, and the management is pretty optimistic on the earnings prospects as well, focusing more on individual segments, the women's segment, the children's segment, and the overall premiumization kick that comes in. 1344 on Bata. 20 seconds left to go for market pre-open. So we're going to just take a look at what the SGX is doing right now. Flat as flat can be, nothing much is happening there. Asia as a pocket is looking weak. So 0.5% given up for Hang Seng. Nikkei 225 is down about 0.75%. No major cues coming in there. 11,092 for the SGX Nifty. Probably you could see an extremely flattish open this morning. For the pre-open, about 0.1% higher on the Nifty. For the Sensex, it's about 0.5%. So that's what you've got. Individual stocks are what's going to see more traction in early morning trade. Come back to the index in a bit. Wipro is showing you bigger moves this morning. So the stock's up about 4.5%. Remember, yesterday it went ex-bonus. Post-adjustment, the stock ended about 2% higher, I think. Vedanta is up about 1.9%. Tata Motors, 1.9%. Power Grid, 1.3% higher. HUL, ITC, BPCL, Hero MotoCorp are all some of the bigger gainers in trade today. Even HDFC Bank. L&T is now at 1326, so looking smart. And Bajaj Finance, Bajaj Twins are also in the green this morning. Amongst the losers, HPCL is down 2%. Bajaj FinServ is down 1.6%. GAIL, ONGC, Tech Mahindra marginally lower. But again, it looks like a fairly decent start. And no big cuts on any of the names. Therefore, the currency, a bigger move coming in this morning, taking us towards that 70 to the dollar mark. Yesterday's close was somewhere around 70.28, and you're seeing some strength building up in the currency as well. However, yesterday's bond market close, 7.38, stays there. Not much of a change on that front, at least.
Yeah, well, interesting. I want to see if there are any reactions to Biocon in the session today. That's a stock in news. Sentimental impact was what the belief was, but it's a product-specific observation that has been issued. 6 products, so we don't know the nature, but well, looks like the sentiment in the first 1 minute is very negative, but this is liable to change. So let's wait and watch what happens here. Also want to mark what Endurance Technologies is up to after the big downtick yesterday because of the OFS. Is it seeing some semblance of sanity? Let's wait and watch if indeed that comes about. For now, marginally higher, but let's wait and watch. The winners of the last few days, the Dilip Buildcons, Repco Home Finances of the world, those should come up. They've been having phenomenal moves the last few days, Dilip Buildcon in particular, and let's see if it continues to rise and shine in today's session. Repco Home Finance, last 2 or 3 sessions has been very strong. For now, just a bit tempered. Dish TV is at 42. That's quite something. CLS has come out with a note, of course, on Z Entertainment today. They believe that the deal could happen at a premium and the stock is trading at a discount. But Dish TV slowly but surely moving up as well, along with Z Entertainment. Haven't quite seen the same uptick, or maybe I'm mistaken in Z Media or Z Learn. But the other companies, essentially, which is Dish and Z, have certainly done really well for themselves. CG Power, another 3.5%. So continuing in the vein of the beaten down stocks which are moving up, CG Power is yet another name which has done so. So watch out for all of these. And today, ICICI Prudential, the first one ticks, okay, no, I think that is changing. Just watch out for IDFC First Bank, because Morgan Stanley has come out with a note wherein they have cut the target price on IDFC First Bank to 30 rupees from 35 earlier. They believe, compared to peers, it is expensively valued. So do watch out for this one. Let's wait and watch what happens during the course of the day. We'll talk about this with Parthiv Shah. Which of these small size, mid-size, private sector stroke public sector banks are worth buying into? I'm told Sameet Chavan is with us. So let's get an initial perspective from him as well. Sameet, strong gains for the Nifty Bank, actually more so for the mid caps and the small caps. The question is there a trade for somebody? The Nifty looks like starting off flattish this morning.
Morning, Neeraj. See, there's no brainer as far as trend is concerned. Nifty has already broken out from its important resistance. Previous to last a couple of days, we saw some kind of consolidation in index, and at the same time, mid cap and small cap, started rebounding from low levels. But since last couple of days, in fact, our benchmarks have started rallying, and in last couple of days, index has already broken its important resistance zone. So with this move, we expect Nifty to head higher. Any dip, minor dip, probably 20-30 points from yesterday's close would be a good buying opportunity. It would make a good risk to reward ratio. 10,975 would then become a stop loss level, and we would expect initially Nifty to head towards 11,110. But looking at the overall setup in mid cap, small cap basket, apart from that, if you see Bank Nifty, which has already broken out from its important resistance, we won't be surprised to see this rally getting extended towards 11,300, 11,400 over the next few days.
Okay. Let's talk about specific stocks. And Sameet Chavan, your stock recommendations for the morning?
See, day before yesterday, we recommended Tata Motors to our clients, and yesterday we saw a mild profit booking in this counter. But stock has already broken out from its multi-month resistance of 186, and hence we would interpret yesterday's profit booking as a good buying opportunity. One can go long in Tata Motors. It's a positional call. Immediate target would be around 202, but we expect this rally to extend towards 215, 218. So one can go long at current level, keep a stop loss around 181. Apart from this, we like Bajaj Finance, which has been consolidating of late, has formed a strong base, and in last couple of days, the stock has gained quite a bit. With yesterday's move, stock managed to surpass its previous swing high, thus confirms a breakout, and hence going ahead, we expect Bajaj Finance to continue this rally. 29.20 would be the level to watch out for in the upward direction. One can go long with a stop loss of 26.95.
Okay. Yeah, Bajaj Finance yesterday was romping up on the charts for sure. Parthiv, since we're on the topic of that, and I mentioned that I would want to hear from you about what's the view on the mid-sized banks. My final question to you for this morning, those set of banks, IDFC First Bank, and then I'll probably get in a DCB and a couple of others too, Federal Bank, for example. Out of this lot, which looks the most promising for somebody who wants to take a, let's say, 3-year bet?
See, Neeraj, if I were to put it in a way that betting on Indian private sector mid-sized banks, which are below 25,000 crore market cap, which have the potential to be the next 1 lakh crore market cap banks over the next 5-7 years, then I think our biggest preference is for RBL Bank. No doubt, I think ever since we have been recommending this, it has gone up, and we would prefer, some sort of correction before a new entry. But the old positions, I think we'd certainly love to hold. This is a great franchisee, scaling up very well, and more importantly, the consumer-facing business, the credit card business, the joint venture that they have with Bajaj Finance, Bajaj Finserv, I think makes it a very, very exciting proposition going ahead. And the credibility of the management. We know for the fact that banking business is all about the management management at the helm, they are the ones who love the scale and create all the processes in the bank. The second best name, I think, at this juncture, as I just mentioned, would be Federal Bank. I think, again, this is a kind of not much loved bank of late. I think the valuations are quite kind of appealing. And I think, yes, they had these spats of bigger slippages number, but I think all those problems could be problems of the past. And over the period going ahead, I think we are expecting the NIMs to improve, the operating profitability, and especially the profit before provisioning to really improve. And if the provisioning levels are also to come down, I think this could be a great franchisee to own, which can really scale up going ahead. Quick comment on IDFC First Bank. I think many people probably would write this off. I'm not in that cap. It's more like that high risk, high reward sort of a bet. And the bet is on Mr. Vaidyanathan. He knows this business in and out, and probably a lot of senses have been put into behind this merger and how fast he can synergize that. No doubt it will be more like a 3 to 5 year bet. But from these levels, there is not much to lose. And I think this can really be something over the next 3 to 5 years, which can surprise a lot of probably banking analysts.
All right. On that note, Parthiv, we'll let you go. Thank you so very much for joining us this morning. Parthiv Shah there with his views. Bringing in Jyotivardhan Jaipuria, founder and CEO of Valentis Advisors. He's joining us on the show right now. Good morning to you, Jyoti. Just want your sense right now on the broader market outperformance that we've been seeing, and it's actually quite a reversal from what we've been seeing the entire 2018, where the mid caps and the small caps were completely written back. There was no interest whatsoever. But suddenly, the very same mid caps and small caps, because of their depressed valuations, have come to the forefront.
Yeah, so like at the beginning of the year, we had mentioned this in our note that we think mid caps will outperform large caps in the course of this year because of 3 reasons. One is, as earnings come back, mid caps tend to do much better because earnings growth in mid caps tend to be much higher. Second is there's been a sharp underperformance, and if you look at history, typically the underperformance is around 17-18% between the mid cap and the large cap. And when we reach that level, then typically the mid caps start to outperform. Third is, again, if we go by history, we've never really seen 2 consecutive years where the mid caps have underperformed the large caps, or where mid caps have given a negative return. So just by history, and this is like a 20-year history since the mid cap indices were created, it was like this year should be a year where, after having underperformed last year, this year the mid cap should outperform the large caps.
Okay, interesting. Jyoti, stay on. So much more to talk about. Just about 4 minutes left for the markets to kickstart trade. It's time to get our viewers all that they need to know to stay ahead in trade today. First up, mid-sized company Endurance Technologies, the offer for sale, non-retail quota, subscribe 4.5 times. The retail portion of OFS opened for subscription today. The stock stabilizes after an 8.5% downtick yesterday.
Regulatory hurdle for Biocon. The US FDA has issued a Form 483 with 6 observations for its Bengaluru facility.
Odisha Cement has clarified that it has not authorized Allied Financial Services to transfer or use pledge mutual fund units.
In key bulk deals, DSP Mutual Fund has sold 3% stake in Everready Industries at 200 rupees per share.
Antique Stockbroking has come out with a note on NBFCs. It's initiated coverage on Canfin Homes with a price target of 373 rupees. It has downgraded LIC Housing Finance to a sell from a hold with a price target of 440.
A smaller name there, Himachal Futuristic Communications, has bagged yet another order of 117 crores for the supply of optic fiber cables. All right, 3.5 minutes left to go for market opening. Jyoti, just to get in a sense from you, what is the approach going to be? Because when we've seen a lot of brokerages put out targets of 11,000, 11,200 on the index, which we've already achieved at this point. Do you think the rest of the year is probably going to remain more of a consolidation play?
Yeah, so like I guess if you look at the last 15 months also, there have been 2 markets, right? So the broad Nifty or the Sensex has been in some sense consolidating. We've probably been flattish for the last 15 months in the Nifty and the Sensex, whereas the mid caps and the small caps have done very badly. Mid caps are down like close to 20% and small caps are down close to 30%. So, for the Sensex, we probably have to see another phase of consolidation which continues, or we see some price correction. So my sense is we'll probably get both a time and a price correction coming through, so that valuations become a little cheaper. We are at the cusp of an earnings cycle recovery, so to that extent probably markets will be a little more expensive than they've been in the past, because typically at the start of an earnings cycle you could live with slightly higher valuations. But yeah, at the moment we are at valuations on the large caps which are probably not very comfortable.
Some news bits. Bharti Airtel promoters, and the news is on your screen, they've renounced rights worth 5,000 crores in favor of government of Singapore. I believe the holding company, I'm reckoning this could be through Temasek, but let's wait for further information to come in. But well, that's 5,000 crores worth of rights renounced in favor of government of Singapore. Let's wait and watch. Bharti Airtel is a company in news, by the way, keep in mind. Talks about the one rights issue, S&P 500, S&P Global Rating saying this 25,000 crores is not necessarily enough for the ratings to be stabilized. Typically, we all know that rating stabilization would follow a period of stock movement. The markets tend to discount either positives or negatives in a company a lot earlier than what rating agencies typically tend to do, with reason maybe. So nothing to say that that is a negative statement necessarily for the stock, but lots of news flow surrounding this. This is important. We'll request Jyotivardhan Jaipuria after the market opening to talk about this in some detail, not necessarily a view on the stock, but what his view on the telecom space is and what does such a thing mean for Bharti Airtel individually as well. Well, it's less than a minute or just about a minute to go for the markets to kickstart trade. So need to just dwell in on the market open for a moment, and then we'll come back to Bharti Airtel and all the other companies in news as well. Top calls from our experts. Aditya, to you first. Your top call for the morning.
I'll go in for a long trade on Petronet LNG at 227, put a target of 235 with a stop at 222.
All right, Sameet Chauhan, what about you?
I wanted to go for Tata Motors, but it is already opening up with a decent upside gap. Then I'll go with Bajaj Finance. Certainly looks good, poised for a decent move. 29.20 would be my target. Stop loss at 26.95.
Okay. So those are a couple of names that both our experts believe can be bought into. Sameet wanted to buy a Tata Motors, but that's opening with a bit of a gap. Imagine the results came in, everybody's talking about much higher downsides. It's had a remarkable turnaround Tata Motors has had. Okay, 11 seconds to go. We'll have a start which is marginally in the green, maybe about 0.25%. The question mark is, can we build on from there? Or like the rest of Asian pack, we'll say subdued today. Here are the first rates. 0.25%. Or just about there. Actually, it's a very flattish start. The Nifty Bank absolutely flat. So the large caps certainly not showing any kind of big moves on the upsides. Not cracking, but certainly no moves on the upside. Very, very flat, completely flattened out. The mid caps and the small caps too, nothing too dramatic. About 11 points for the small cap space, 0.25% for the mid cap space. So no, it's a start which is much unlike what happened yesterday and day before. However, the breadth is positive. Look at that overwhelming sense of green this morning as well. A lot of flattish moves, very, very dicey to say whether these will stay in the green or no, but still more green than red. Now what's gaining? And look at OMCs, the last 2 or 3 sessions, frankly in the large cap space, these stocks have been the best performers. Big move today to HPCL, Tata Motors, Power Grid, some extremely strong moves out here. Bharti Infra up about 1.5%. Z continues to rise and shine. CLSA bullish on that stock, continuing to remain bullish on the stock. On the losing side, Indiabulls Housing Finance, big moves the last few days, cooling off a little bit in the session today. Coal India marginally off, ICICI Bank marginally off, and metals seem to be slightly subdued today in the morning. Vedanta, Tata Steel, JSW, all three have a bit of a soft trade, but nothing too dramatic. And Power Grid now climbs up to the top of the pile when it comes to the Nifty gainers. But no sizable movers, just about a flat day. The Nifty Bank already in the red, but it's a flattish start. What about some of the mid caps which have had a terrific move the last few days? I'll dwell a bit on just a couple of top movers the last few days. So these are the top movers of the last 7 days. Dilip Bilkon, Repco, Dredging Corporation. Each of these starts off marginally off, not to suggest there is a trend today, but they're starting off in the red. What about companies which are trading close to 52-week highs or in fact trading near life highs as well? Avas continues to rise and shine, another 2%. Divi's margin in the green, Bata flattish. So say for Avas, in the list of the top movers the last few days, everything else is starting off on a very, very flat note. What about the newsmakers? What are the broader markets, Deina?
Biocon, with those 6 observations, is open lower by about 2% of the session. IDFC First Bank, that's down 3% on the Morgan Stanley price target, down to about 30 rupees. You've got the likes of an Indian bank trading lower by about 2%. Motherson Sumi is down closer to 2% as well. Syndicate Bank 1.5% loss. Piramal Enterprises down 1.5% too. Suzlon Energy, which has been a real interesting play over the last 1 month or so, where the stock has moved up 93%. Today, some profit taking in the stock, which is down about 4% in the session. Repco Home Finance, we already highlighted. Ajanta Stainless 2 is down 1.6%. Remember, 1 month the stock's moved up 69%. So these are all the names within the mid-cap space that have seen heavy buying activity in the last few trading sessions. Aside from that, gainers, you've got Gujarat Gas, which is up 4%. Suntec Realty is up 4%, almost 4%. JM Financial is up 3.2%. Tata Power is up 2.8%. Schneider is up 2.7%. Tata Lexi 2.5%. Avanti Feeds, we already spoke about that one, still continues to ride higher. And Himachal Futuristic, HFCL, yet another order win, 117 crores. It recently won an order of more than 500 crores just last week. And the stock is up about 2.5%. Jubilant Life, Manappuram Beverages, Praj Industries, there's no stopping that one. Yesterday too, the stock was up about 6.5%. Today too, the stock's up about 2.5%. Just some quick comments then from our technical experts before we thank them. Aditya, what should we look out for the rest of the day, particularly as we move towards the Bank Nifty options expiry by the end of the day?
So one thing to watch out is Nifty has made an open high same in trade today, so that happens to be 11,077.95. The open high tick is the same, still early in trade. So I'll closely watch out for that level. If that level is taken out, I'll take a fresh long for targets of 11,120. If that level is not taken out in say for example next 15-20 minutes of trade, I could probably look for a short trade, put a stop at 11,080 and look for a short trade on the downside. Probably index can slide all the way down to 11,000 as well. So crucial open for the markets, open high is the same. I'll closely watch out for that.
All right, Aditya, thanks a lot for joining in.
Pleasure.
Sameet, quick comments from you?
I think we remain a bit, some bit of profit booking is quite possible, but any dip would be a buying opportunity according to us. In fact, any dip towards 11,030, 11,020 would, according to us, becomes a good risk to reward ratio. Hence, we would remain a bit with a broader view. Stock has broken out from major hurdle, so use dips to go long.
Okay, we'll leave it at that. Sameet, Chavan, thanks so much for taking the time out and being with us as well. Back in conversation with Jyotivardhan, Jaipuria. Jyoti, just a brief mention. I mean, I don't want you to comment on whether you would buy, sell a company like Bharti Airtel or no. But what do you make of all the news flow surrounding this? There is a rights issue. Now they've, of course, renounced the rights of 5,000 crores in favor of the government of Singapore, which arguably should be viewed mildly positive. But rating agencies saying that this is too less or too little for ratings to stabilize in the first place. Your views on what this does to the balance sheet and eventually the telecom space at large?
Yeah, so like if you look at the telecom space, I guess what we are seeing there is very intense competition. So to that extent, all the players are trying to beef up the balance sheet because at the moment, there's this whole game that, okay, I want to grab market share first and we'll figure out margins once we grab the market share. So the good thing is that probably, we've seen this play out for the last 2 years. The stocks have reacted to it. So maybe we are coming closer to the end of this whole thing rather than it's the beginning of this thing. Second is, we've seen consolidation in the space. So now it's like more or less emerging that there'll be 3 big players in the space. So you've seen the consolidation part, you've seen a lot of the pain behind us, but we still are not very positive on the stocks. We still think there's, another probably 6-12 months to go before we can, start really buying these stocks. Because there'll still be pain at this sector as, people try and bleed each other out and gain more market share.
Jyoti, the market seems to have found some newfound love for PSU banks as well. I don't know if it's got to do with some or more banks coming out of the PCF framework or more capitalization being doled in, whatever the case may be, but the stock movement suggests that there is a bounce which is not just a one-day bounce. My question to you would be, would you see favorable risk reward there, or would you rather bet on maybe the mid-sized private sector banks, or are you looking at only the larger ones because there are some tailwinds there too, namely the credit costs coming off?
So, like our view is that for the last 10 years, if we see, it's been all about retail banks, and all the corporate banks have done very badly. We think the next 18 months are going to be about corporate banks. So we like corporate banks in general. What is helping them is that a lot of the NPL provisioning is now behind us. Going forward, NPL provisioning will ease off. Second is the bankruptcy code is, now started to function. It has taken longer than one thought, but we're starting to see some resolutions happen. So, as we go along, people get more confidence that, you're starting to see resolutions. You'll have some, accounts which we earlier treated as NPLs, which will be written back. The third thing which, is important is what the bankruptcy code has done is it shifted the whole power equation from, probably the borrower to the lender. So now on going forward, people, when they default, then they know that if they go to bankruptcy court, they'll lose control of their company. So there'll be, the borrowers will be more careful. They'll not want to default unless they really reach a situation where there's no way they can pay because they don't want to lose control of their company. So now, all the lenders have this sword that, if you're not paying, I'm going to take you to NCLT. So to that extent, I think, the whole power equation has shifted. So over the 5-year, 10-year, in a structural view, I think, the lenders have probably got more power now than they used to have earlier. So all this is good for corporate banks, and, most of the public sector banks are more corporate lenders than retail. So they will also benefit, though, there are, of course, retail banks private sector banks you can play for the same story also.
Different aspects playing up for the auto space now, Jyoti. We're talking about particularly focusing on tractors, how the monsoon will shape up, whether or not consumption and the extra money that's come into the hands of, the public will lead to at least a boost for the two-wheelers, maybe not for the more expensive four-wheelers. Keeping in mind the background over the last few months, a change of events is anticipated to work well for auto companies?
So, auto is a wide sector. So our, views, we played the tractor segment for most of the last 1 year because, our analysis that if we see tractor sales, they generally do very well in the run-up to elections, and they tend to do badly in the year after elections are out of the way. So our view is that tractors were very good last year, and we think tractors have more or less peaked out, so we're not very bullish on tractors going forward. What we like amongst that whole auto space probably over the next 1 year would be commercial vehicles. So it's something which probably may not do well over the next few months, but that's the space as we get into next year and the BIS 6 norms. I think from, the second half of this year, we'll have strong sales growth there with people, buying ahead of the BIS 6 norms. And that's something which I think will do very well. So the tractors is probably what would be our number one preference in the whole auto pack.
Okay. Anything else as a theme?
Sorry, not the tractor, the truck sector.
Okay. Got that. Anything else, Jyoti, as a theme that you're working on right now, where the potential looks significantly better than what the rest of the market shows up?
Yeah, so the other theme which we are focused on, and that's one of our biggest overweights in the portfolio, is actually been capital goods. It's something which nobody likes. So it's a sector which is totally under-owned. It's a sector which has underperformed a lot. And there are some segments in capital goods where we are seeing very strong utilization coming through, because for the last 10 years there's been no additions to capacity. So we are starting to see utilization levels pick up a bit. I think there'll be strong operating leverage. So over the next 2-3 years, I think capital goods stocks will see earnings growth which are probably going to be 15% plus. And just remember, it's a sector which has done very badly. Nobody owns this at the moment. And once we start seeing more visible earnings growth over there, then that's a sector which can re-rate quite strongly. So that's something which we have been bullish on, which most people in the street are not very excited about at the moment.
Okay, that's interesting. Yeah, selectively a few people might be betting on it, but Jyoti's point is well taken. Not the largest street which is bullish out here. Jyoti, we spoke about banks and larger financials. The recent spurt of interest re-emerging in NBFCs, a couple of them have managed to raise money by selling some piece of their verticals as well. And somehow in a few cases, the asset side of the business spoke loud and clear in this quarter too. You think the concerns are behind us? And if at all there are concerns, they are now in the price, because a lot of these companies have corrected 40-50% from the top, even after the rally that we've seen thus far.
So, frankly, we have been looking at the NBFC space more because we've seen such a sharp correction. But at the moment, we still have not really found very compelling opportunities over there. We still think that the banks are like a better and safer place to play, because, there'll be a lot of activity in the corporate banks now. In the NBFCs, what you have is probably the next 2-3 quarters will be very slow in terms of growth, because everybody, for the last 5 years was focused on the asset side and focused on, getting a strong growth on the asset side. But the next few quarters are just going to be managing the liability side. So I think, there are like 2-3 quarters where we have to wait and see this transformation happen. To that extent, we think the share prices are not really going to run up a lot, and we are happy to, play the banking side, where we think we could get a much sharper improvement coming in the earnings profile.
Okay, Jyotivardhan, Jaipuria, it's always a pleasure chatting with you. Thank you so much for taking the time out and giving us your thoughts. And the big takeaway, of course, from this conversation, Jyotivardhan, Jaipuria, in a minority way, of course, not too many people bullish, but capital goods is a pocket that he said that there is the largest overweight position in their portfolio. So keep that at the back of your mind if you indeed follow Jyoti. We should have maybe asked him about staffing companies, because that's the conversation that we're having on the other side. While the markets are very, very flat, two very interesting corporate conversations. Firstly, with Quess Corp, Chairman Ajit ISAC joins in to talk about how business is shaping up. And we particularly wanted to ask him about the non-business related diversification that they've done in buying a football club. So that's coming up next. And then we speak to VP Nandakumar of Manappuram Finance on business outlook, fundraising plans and more in light of what's happening in the NBFC space in the last 15 odd days. So that's a very important conversation to tune into as well. Stay tuned. We'll be right back.
वक्त ने ली करवट और जीत गया जनता का विश्वास। 17 दिसंबर 2018 बना किसानों, ग्रामीणों और ग्रामीण अर्थव्यवस्था की नई बुनियाद रखने वाला ऐतिहासिक दिन।
मैं भूपेश बघेल ईश्वर की शपथ लेता हूं कि मैं विधि द्वारा स्थापित भारत के संविधान के प्रति सच्ची श्रद्धा और निष्ठा रखूंगा।
साकार हुआ कर्ज माफी का सपना। 16,65,000 से अधिक किसानों के 6,100 करोड़ रुपए के अल्पकालिक कृषि ऋण माफ करने का फैसला सिर्फ 2 घंटे के भीतर लेने वाली देश की पहली सरकार बनी छत्तीसगढ़ की नई सरकार। 10 दिन पूरे होने के पहले ही 3,57,000 किसानों को मिल गए 1,248 करोड़ रुपए सीधे उनके बैंक खातों में।
मोर कर्जा टोटल माफ हो गए है और जो सरकार अपन वादा कर रही से वो वादा पूरा करीस और एमे मोला और हमारे किसान परिवार जतका भी वहाँ रहे सबला बड़ा खुशी हुई और मैं इस सरकार ला गाड़ा गाड़ा बधाई देता हूँ।
कई हितग्राही किसानों से मुख्यमंत्री ने की सीधी बात।
नमस्कार, मैं भूपेश बघेल बोलाता हूँ। ऋण माफी के हमन घोषणा कर रहे हैं और आज आपके खाता में कुछ पैसा पहुँचीस?
हाँ जी सर, पहुँच गया सर।
बहुत बहुत बधाई।
एक आध बार आप भी बधाई सर।
पूरी हुई आस तो मजबूत हुआ विश्वास। नई सरकार के साथ किसानों ने लिया संकल्प, गढ़ हो नवा छत्तीसगढ़।
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Sports science is the science of performance. We look at all the variables that could give an athlete a competitive advantage in a high-performing environment.
He's been a sportsman, a successful coach, a sports scientist, a motivational speaker, a monk, and an entrepreneur.
How we navigate our body with physical, nutritional, emotional, spiritual health. That is what I teach people. Where to find balance, how to find balance, and the quest of finding balance more than anything else.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Back with Indian Open right here on Bloomberg Quint. The equity markets are very, very flat today, much like what the rest of the Asian pack was. So no surprise there. Remember, the US markets had corrected quite strongly yesterday. So we are actually not taking on those losses, but withstanding those losses as well. 3 days of losses to the US markets. Our markets have done reasonably well. However, flat in the session today. Let's shift focus to the corporate corner, and two corporates coming up. The first one, Quess Corp. It's used the last couple of years to ramp up its presence in the staffing and the IT solution services, be it through organic expansion or acquisitions. While there is no denying that both verticals have a lot of money to be made, one also needs to look at the cost of buying some of the companies, and if growth falters, would some of these areas see some moderation? Frankly, the conversation in the last couple of days is, where are the jobs? Let's pose all of these questions to Ajit Isaac, Chairman and Managing Director at Quess Corp. He joins us right now on the show. Mr. Isaac, good having you. Thanks so much for joining in. If I can first ask you a broad brush question, which is not necessarily only on Quess Corp. A lot of conversations, varied numbers, divergent numbers about the job scenario in India. What have you made of all of this? Because the high frequency decibels that we hear all speak about jobs not being there in the first place.
So let's take a look at it from two dimensions. One, internally from Quess, and second, at a broader view at the economy itself. At Quess, last year we added about 100,000 people to our company. So which means we are close to about 300,000 people right now among the 2 or 3 largest private sector employers. We added effectively 1% of the total workforce last year to the Indian economy, which adds about, let's say, 10 million people. So maybe the largest hiring company in India in the last 1 year. So from that standpoint, I can't say that there are no jobs available. But having said that, rather than looking back, if you look forward, I think there are 2 or 3 key drivers to growth in the Indian economy. One is that post-elections, I think there will be a spurt in growth. There'll be further investment. I think after all the conversations and the election rhetoric is off, people focus back on driving jobs and driving investments that will further spur the economy, regardless of whoever is in power. The second point is there's a formalization process of the economy going on post demonetization and the various initiatives of successive governments in India. So that, I think, will lead to a lot of movement of jobs from the informal sector to the formal sector. One of the prime beneficiaries of such a movement will be a large hiring company like Quess Corp. So this, I think, will be another benefit to us. The third is there are specific sectors that will begin to crank up again. My sense is that infrastructure will look up because there is a pent-up demand for infrastructure in India. Infrastructure has a drip-down effect on the rest of the economy as it picks up. So all this, I think, portends to a situation where we'll see more jobs being created. That's my take on the overall situation of jobs.
Now, how does this tie in with what Quess does, not just necessarily over the next 1 or 2 quarters? Frankly, that would be a bit of a pedestrian conversation at this point of time. The thought process would be, how do you see this business building out over the next 2 or 3 or 5 years? Because Again, divergent views here. Some people who are looking at the very short term talk about how your operating performances are in line, performance is steady in some of the key verticals. At some quarter it is not so, and how you're doing versus your competitors. But I'm just thinking out loud, over the next 3 to 5 years, if organized staffing is going to become big, then what's the vision that you have for what the business could be in March 2022, say?
So that's a great question. I agree that numbers are available for everybody to read off. We've consistently outperformed the market and competition. We've had a compounded annual growth rate in excess of 40% across the last 5-7 years. So the numbers are there for people to see. But where are we going? I think that's what's the key right now. We are transitioning from a 5 vertical company into developing just 3 platforms for Quess. The 3 platforms for Quess will be workforce management, asset management, and tech-led customer lifecycle management. So that's the big picture, that we are transitioning from verticals to 3 platforms. And what will operate in these 3 platforms? In let's say, the workforce management platform, there is a need to generate supply of people. There's a need to manage the recruitment, the identification, recruitment, and onboarding of these people. There's a need to pay salaries and invoice clients for each of them. So that's what we hope to build in by way of technology into the platform. And this, I think, is a game-changing process for us. In asset management, we've got basically 3 types of assets. We've got real estate assets that we manage in the facility space, about 220 million square feet of space with about 60,000 odd people engaged in that, clearly the market leader in India in that. The second one is telecom assets, where we manage or have been managing close to about 75,000 towers out of maybe about 400,000 plus towers in India. So significant presence in that space. And the third one is industrial asset management, where we manage power plants, steel plants, large industrial equipment, and the non-core equipment available at some of these plants. We have more than 6,000 to 7,000 technicians working in this space. Again, the country leader through a brand called Huffingtons. So this is the asset management space. And in the technology space, we have a JV, which we run with the Tata Group, called Connect Business Solutions, previously called Tata Business Support Solutions. Among the 2 or 3 largest BPOs in India, employs about 30,000 people. We're looking to add further assets to all of these verticals. But I think in each of them, the key point is that we've got a leadership position and we're transitioning to a more digital approach of serving customers. So that's the big picture.
Interesting. If I can pick your brains on the last point that you just made. A lot of people have sounded the death knell for the kind of what quote unquote they say is routine job work. Forget the BPO services, but the IT services picture by and large. A lot of people have done that. Now, my question to you is, when you're talking about hiring more people within that BPO vertical that you spoke about, do you foresee unhindered growth prospects for the next few years, which prompts you to talk about expansion in this business? Is not competition from the slightly lower cost neighbors in East Asia catching up, or has not already caught up?
So that's a good contextual question. I think we are the type of growth that we're going to experience at our BPO business is going to be non-voice, non-data, non-headcount led. What we're focusing now is developing more processes that we'll run, not necessarily number of people we'll add. So that's where we're moving away from a headcount-led approach to a process-led approach. In delivering a process, the number of bots that we're using, machine learning that we are now investing in, artificial intelligence that is available in some of the products that we're buying to service our customers is significant. So I think you'll see a company that's growing from just taking voice calls into managing processes, which may include voice. And part of it is delivered voice, but usually at the first end is delivered through automated processes. So that's the direction of growth and trajectory that that company will take.
Okay. In some sense, Mr. Isaac, do you would the sector that you are in right now in some ways resemble maybe what IT would have been, I don't know at what time cycle, but at maybe a few years back, wherein it's a space which is organized, managing a lot of people within different companies, yes, but doing homogeneous kind of work and in a high growth trajectory. the only difference that I see, and maybe correct me if I'm wrong, but the difference that I see is that that business since its inception had very high EBITDA operating margins. The nature of your business doesn't leave that high an EBITDA profile for a business of your kind.
Yeah, so the nature of services performed in both the cases were different, and the margin structures were also therefore different, and therefore you'll find a differential EBITDA between what IT delivered in the early years and what we're delivering right now. But the point is, with digitization that we're doing and the automation of processes, we have a chance to leapfrog from one generation to another one. The second thing is that if you measure us on return on capital employed over a period of time, we will be nearabouts the IT companies as we progress forward. We've raised a boatload of cash in the last 2 years through our IPO and IPP. Therefore, our return on capital has been subdued for the last couple of years because of the expansion of the capital base. But after the capital is fully deployed and the cash conversion is happening from EBITDA to earnings, you'll find that our return on capital is going up. But the nature of business will be different what we do here from what IT services do, except that we have also an extensive use of technology in the services that we deliver. One point to note here is that most of our services are annuity-based services, whereas in the IT services space, most of them are project-based services for shorter lifespans. So the predictability of earnings is higher here, but the margin structure will be lower.
Interesting. You reckon that the last couple of questions really on this conversation, you reckon that your return on capital employed, which again, correct me if I'm wrong, but I don't think I am, has declined from what it was in FY15. I think there the numbers suggest it was maybe northwards of 22, 23 times to about 14 odd times or 14 odd percent or 12 odd percent in the current years. Can it revert back to those numbers in the next 3 or 4?
Yeah, so you're right. So after 15, it was year 16 when we did our IPO, and year 17 when we did our IPP. So through a combination of two, public market exercises, we raised almost about 1,200 crores on a much smaller equity base. So the deployment of that capital and the returns from that capital will take about 2-3 years. There's a lag time. So post the lag time, we expect it to come back to 20% numbers. In fact, our internal target is to stay above 20%. That's where we are goaled at. If you look at our cash conversions right now, at the beginning of this year, we had a cash EBITDA conversion of maybe about 30-32%. Last quarter, it was about 44%. Q4, we expect it to be about 46%. So we've grown almost about 50% in cash conversion in 1 year, which I think is significant and points to an increase in the return on capital over time. So that's the trending in our company right now in terms of cash, earnings, and EPS, therefore.
Typically, a market leader or otherwise will not be able to outperform the sector in a meaningful way. I mean, that's what the usual parameters are. So would you reckon that the sector by itself will be in a high growth phase and you'll be able to do maybe marginally better than that? I mean, organized staffing, I believe there are only 2 or 3 listed ones and maybe a few others which are unlisted, but it's a small sector relatively.
Sure. So there are 2-3 developments here which you have to factor into computing our growth. First is that we will grow a little bit faster than the market. So let's say the market's growing 15 to 18%, we grow 20 to 22%. The second one is that there's a formalization of economy taking place. In the formalization process, there will be specific projects that will come to us, one-off projects in a year, which cannot be factored into an annual program structure, so to say. They're one-off things that happen. And every year we've seen a few of them come, which really gives us a boost of 1 or 2%. Add to that is some acquisitions that we'll also layer on. So if you add it all up, I think we have a good chance of, we have a good probability of securing growth in excess of 20% in the staffing business on a year-on-year basis, even in spite of the fact that we are a market leader and we have a large base already.
Interesting. And with better return ratios and higher margins. Okay, let's see what it does to the bottom line. I just have one final question, Mr. Isaac, and that is not quite related to growth, but you made an interesting diversion of sorts, right, with that football club that you now have stakes in. Why that? I mean, we've seen past history of at least some companies making these unrelated maneuvers, not quite paying off, either in terms of returns or at times even leading to losses. It's happened to a number of companies. Why have you done this?
So the investment here was not as a sort of a business investment that we were making. We invested all of 10 crores to buy 70% of a marquee club in India, perhaps the Liverpool of India called East Bengal Football Club. It has a fan base in excess of 1 million people, even on its Facebook site. The investment has gone off very well. When we invested in the club, it was at the bottom of the league. They have a last match that's due this Saturday. If they win that, and if there's a related development in the league, we could end up being number one in India, representing India for the official Asian Federations Cup that will come as the number one club of India. So it's a terrific progression for our asset from where it was to where it is today, from when we invested. Why we invested in this was to get our branding through a perpetual asset that we will own. So we've never invested in branding before. For a small cost of 10 crores, which is effectively about 1/3 of our overall branding costs in a year, we're able to own a permanent property. And this has worked well for us because this brand reaches out to a cross-section of society that cuts across age, religion, geography, etc. So we are quite happy with the results we've achieved. Just as another thought, the value of this asset is maybe 10 times greater than what we paid for it. If you look at comparable transactions that have taken place in the same sector recently. So we're in the money, and we are happy with what it has achieved for us so far.
We hope it does win and does represent, and if so, do let us know. We'll cheer for that as well. Thank you so much, Mr. Isaac, for laying some ground here.
Great talking to you. Thank you, Neeraj.
Cheers. Okay, that's Quess Corp. Interesting. I think the report suggests that they're on the way back to some better times. 20-22% growth, better ROC, and better margins over the years. The management seems very bullish.
Yeah, let's see. Place the stock for the time being, though, is not doing a whole lot much. It's 759. But one pocket which seems to be garnering a lot of interest has been the gold financing space. Manappuram Finance has found an investor in IFC, which will invest 540 crore rupees via debt investments. A large chunk of this money is expected to go into a relatively new area for Manappuram, like microfinance and retail loans. So why the gold mortgage lender looking to expand its presence in these spaces? Let's ask the MD and CEO, Mr. VP Nandakumar. He's joining us on the show right now. Mr. Nandakumar, thanks very much for taking out the time. A good enough funding, 540 odd crores, newer avenues for you. What is the growth potential? What are you going to look at using these funds, and how much of a return are you expecting from it?
IFC, they want to lend us in flood-affected areas, also for the financial inclusion areas, etc., like where the banks have not reached. Those sort of details are required for them. So in Kerala and Tamil Nadu, where in Kerala the flood-affected areas, similarly in Tamil Nadu, cyclone-affected areas, and also in places like Gujarat, there are some places where banking is very much far away. So these data are required by them, so we can do that and we can lend to in these areas. So this is intended not only for gold loan, in other areas also, like in commercial, small commercial vehicles, how to create self-employment, etc., etc. But this is only to Manappuram Finance, not to its subsidiaries.
Okay. All right. So what does this money bring to the table for Manappuram Finance right now? I mean, in terms of the overall liquidity position that you are in.
One advantage, yes, on the liability side, we have the comfort that multilateral lenders are also joining in the lending. So the major multilateral lenders like IFC, CDC, and ADB. So their diligence is a very detailed one. The diligence has been going on for the past 1 year. So the several rounds of discussion, they went to the market, went to all the stakeholders to understand our plans, etc., etc., etc. The capacity to reach to this level. So after one lender, the other multilateral lenders reaching out to other multilateral lenders would be easy. For Manappuram, the advantage is they are very long-term lenders. And also looking at equity stake at a much later stage, etc. So that's the comfort. When when a multilateral lender is providing the liability, that enhances the confidence in the market.
Okay. So when we spoke, I think a few months ago, you spoke about the growth of the gold business, I think closer to 15%. Is that something that you're still going with?
Our growth expectation is this year is not 15%. It will be down to around 10-12%. So this year the growth, the third quarter was not good. The fourth quarter it is slowly picking up. So we don't expect that 15% for growth for gold loan this year. But fourth quarter consolidated growth we expect that to grow to by around 5%.
Mm-hmm. Okay. So just the fact that gold prices now are trading, have been going up since the last 8 to 9 months continuously, and if there is a risk of a downturn that comes about, a turn in the prices, what kind of risk would that bear down for you and the loans that you've already given out?
So the gold prices were going up. Now during the past 2 weeks, the gold prices are coming down. First of all, we are taking the trailing average during the last 1 month. This is on a continual daily basis, these changes are made. This is our valuation of gold. The national gold price, which is published by the association, that is the price. Then that also the preceding 1 month trailing average. Then that is the average price. Then on the basis of that, our LTV is capped at 75%. Then again, for us, our the duration of the loan is a 3 month period. So every 3 months to 6 months period, this loan shall be reset. So the risk on account of the price fall is very low. When we calculate the price of the gold, first of all, we lend only against the family jewelry. For buying jewelry, other components are also there, like making charge, then taxes, etc., etc. So when it is an ornament, the real LTV to the consumer is much less, because we take into account of the only metal price. So these are 5 or 6% of the price reduction from the current level. Also, it may not we may not end up in realizing our dues.
Okay. All right, got that. So, your other allied businesses, aside from gold, which is your core lending, what is the growth potential there? I mean, they're contributing about 30% right now, but is there an outlook where you're looking to increase contribution from these various segments?
I think that segment is growing faster. Microfinance business, currently it is around 3,600 crores. And expected to grow to 3,750 crores towards the end of this fiscal. The other businesses are also growing fast. The commercial vehicle finance may cross the 1,100 crores. Home finance also is growing. The other businesses are also expected to grow. It may grow to hopefully towards the end of this fiscal The other business may grow to around 32%, and the gold business may come down by 68% because the gold our expectation is to grow by 10% only this year.
Okay. So last time we spoke, you said the cost of lending would most likely go up by about 15 basis points. Has that translated? And is it looking like it could move up?
No, now it should come down. It has gone up actually. It has gone up by 80 bips. So now onwards it should come down because now there is a regulatory harmonization. Because of the regulatory harmonization, the loan companies will get the benefit which asset finance companies were getting. In the case of asset finance companies, for their lenders, the risk weight to their lender was based on external credit rating. Now that benefit will come to these loan companies also. So that benefit will come to our companies like microfinance companies, microfinance company as well as gold loan company. Our company being a AA rated company with a new harmonization of regulation, the risk weight to our lenders will come down from 100 to 30%. But not only that, the repo rate also is down by 25 bips, so that benefit also will come into play. Not only that, because many of the banks in the public sector, they are fund-starved. Their ability to lend more money also will go up. With all these facilities, I think we expect the cost increase for our funding, which is around 80 bips, may come down by 50-60 bips. That's our expectation.
Okay, got that, sir. Thank you so very much for joining in this morning and highlighting for us what have been business moving, the impact for you over the last 1 quarter or so and the business prospects going forward. That's the management in Manappuram Finance. Gold prices have been going up, but off late you've seen some amount of correction coming back in. With that, it's a wrap on today's edition of Indian Open. Thanks a lot for watching. Coming up next is the F&O show.